Welcome back to Soar Financially, everybody. Thank you so much for joining us. My name is Kai Hoffman. I'm the CEO of the Soar Financial Group and the @JR Mining Guy on Twitter. You might have noticed we're back in our studio in Vancouver. You'll see a wide-angle shot here in a second as well with my guest in it. But I'm excited to be back in town. This is where everything happens in mining, besides Australia, of course. But really, really happy to be back in my second home here. Fantastic atmosphere here in town. Lots of news came out this morning as we were recording this Tuesday, September 5th, the day after Labor Day. Always a big news day. And I think I've invited a fantastic guest to discuss what is going on in the mining scene, how the summer went, because it's Michael Gray of Agentis Capital. He's somebody I love to talk to. I love to hang out with him. We've spent a lot of time actually this summer together, and I think he's somebody who's not getting enough screen time on YouTube and other channels because he's a fantastic mining research analyst, and I think he's also doing the most in-depth research I've seen any analyst do. I've been on a lot of site visits. He asks the most questions. He's so detailed when it comes to looking at the geology and everything else. Make sure to give him a follow Agentis as well, because I'm really happy to have him on here. We're going to discuss what is going on in the junior exploration scene these days, what are some of the hot exploration trends and topics, of course, as well, and we're going to see what he thinks is going on in the sector as well, because there is a lot of moving parts, a lot of financings happening, a lot of drill results coming out, but do they all make sense? Are they successful drill campaigns? He'll explain it to us. Now, Michael, it is good to have you on the program. As I said, you need to be out more often. I'd love to have you more on. It's
fantastic to be here, Kai. Appreciate the invite.
Absolutely. I'm looking forward to the next 20 minutes here as well, diving into it, because we chatted a lot over the summer. Yeah. We've spent a full week in the Yukon together. We were just on a site visit up in northern BC as well. So much great insights to share. But to start us off, Michael, what is your sense of sentiment and general atmosphere in the junior mining space right now?
Well, right now it's tough. It's pretty negative sentiment for the most part for equity financing for the juniors out there. We haven't seen a market like this for a long time, but I've been a little bit constructive that we're seeing stocks respond really good price action for torquey drill results, things that are catching the market's attention. So I think there's life there, and I think into September, I think we're going to see a little bit of a rebound and pick up in interest.
Absolutely. What were some of the trends you've witnessed? Where is the excitement flowing? What kind of drill results excited the market? What are some of the trends there?
Well, the drill results that are really attracting worldwide attention are ones that, like Snowline Resources, for example, ones where the grade and the thickness is monstrous, world class. Things that attract the senior mining companies. B2 Gold did a strategic investment in this company. We covered it last year, went full coverage this year, and it's a bit of a special situation in the market right now to have that 400 meters plus 2 grams right at surface, open pittable in the Yukon, and so it's attracting capital to Canada, which is a bit of one of the safe jurisdictions, along with Australia, that's attracting a lot of capital. And so we're looking for torquey drill results from plays that are going to move the market.
Yeah, absolutely. You mentioned B2 Gold, and before we dive deeper into specific stories, I want to zoom out and discuss macro. And I don't mean the commodity price movements or anything. Yeah. I mean, what are the majors doing? What are the majors looking for? B2 is an example, investing in Snowline. But what are the exploration trends they're looking for? When I started in the industry, maybe just a personal anecdote, it was, we need 1 million ounces. We have 10 years of production at 100,000 ounces. I think that goalpost has shifted and moved dramatically. To more we need 250,000 ounces easily per year. Otherwise, it's for us as a major not of interest, and nobody will buy it.
Yeah, you're bang on. We see it as tier one. 300,000 ounces a year, 15-year mine life, lower half of the cost curve is really what the seniors are looking for globally. And I think that really started back in 2016. They started to sell their non-core assets, look for bigger core operations, and they pivoted to more open pits and a little bit less jurisdictional risk from our analysis. So they're looking for new districts, synergies within areas they already own, assets, where hubs that they can that grow in. And they are looking in Canada and Australia. To your point, B2 Gold having a little bit of creeping expropriation risk in West Africa. moly in particular. And I think we're seeing the Sabina take over for the first time, having a Canadian asset, production asset soon, and then the investment in Snowline.
Absolutely. I'm trying to understand a little bit sentiment, why it is so bleak. And one hint I get from you is there's too many small projects out there. And I think we've talked about this before. When we were in the Yukon together,
yeah.
PEA came out, and I says, like, who cares? Like, it's 60,000 ounces a year. It's too small. Like, what's the exit? What's the plan here?
Yeah, it's a good point. Most juniors are selling to intermediates or seniors, so you have to have critical mass. And some of the smaller projects that might have been fine back in the 80s and been attractive and developed, fine. There used to be a rule of twos. The seniors used to be 200,000 ounces per year, 2-year payback, and $200 per ounce all-in sustaining costs. At that time, it was just C3 costs. Now that's shifted, as mentioned, to the tier 1 size. So some of these projects are getting stranded if they aren't high quality and don't have critical mass. We also have too many juniors. The reality is we're flooded with juniors in the market these days, and we're seeing a bifurcation of haves and have-nots. So those that have decent projects are able to finance, and those that don't are really struggling in this market as we head into September.
When you say decent projects, and I think we need to define that a little bit.
Sure.
There's tier 1, of course, as you said, 300,000 ounces, 15 years, mine life easily. But when you go down the tiers, tier 2, tier 3, where do you see it petering off? Like, I mentioned a project that with 60,000 ounce a year potential. Where would you rank that, for example?
It really depends. Is it high grade, high margin?
Okay.
And if it's spectacular grade at 60,000 ounces a year, could make sense for a junior producer or an intermediate. Probably doesn't make sense for a senior mining company, given the management time required to administer that type of asset. And is there exploration upside associated with that high grade? Say it's a half ounce per ton or greater. That could be a beautiful little mine and bring all-in sustaining costs down for the firm if it's a multi-asset mine. So I'm not against smaller operations if they're really high grade, high margin, best of breed on that front. But scale is an issue for the buyers of assets, for sure.
Yeah, I'm just thinking, like, looking at early stage grassroots exploration projects. I'm trying to understand, like, okay, where could this go? Like, why even bother, even at an early stage?
It's partly the pedigree of the geology. If it's fantastic and it could lead to further discoveries and eventually augment that 60,000 ton per year PEA profile, then there will be interest, because not all deposits are created equal, as you know, and there's a range of outcomes. There are some situations where the deposit model is poor, and it's probably going to be, that's what it is. Otherwise, that's why the seniors are putting their foot into strategic investments in certain situations before a resource, maybe before a PEA, because they see the potential. It's the type of model they like, whether it be a Hemlo model or a Fort Knox type model. They see this in the gold sector, at least fairly early on, and they can differentiate and then come in competitively to put some sort of 10% toehold position in.
No. Do you focus primarily on gold? Because we've primarily talked about gold, right?
No, we're a lot of gold and silver coverage, but in the last 2 or 3 years at Agentis, we've really pivoted more to copper gold. So we've got a fair amount of copper gold coverage in the Golden Triangle, for instance. And then we've added rare earth elements. We've covered Defense Metals, which is a BC-based light rare earth element company. So we're diversified, and we're comfortable moving into different commodities.
Now, staying on the macro theme, like we talked a lot of gold. Like, how does copper play out there as well? Like, what are the majors doing? Because I know the BHPs, the Rio Tintos of the world, they need massive size projects, right? But again, personal anecdote, but I think I was chatting with somebody and I had a hard time coming up with mid-tier copper producers. Right, just top of my head, like thinking about it for a minute. There's like, okay, I came up with a few names, but there's not too many. So, in terms of exit strategy, who are potential buyers? Like, what is the market landscape actually look like?
Yeah, well, for the larger projects, it is the CapEx that is a barrier for the smaller companies to develop. So, for example, Western Copper and Gold, Rio with a strategic investment, Mitsubishi with a strategic investment. Up in the Yukon, this is a project we cover, the company. and billion tons of reserves, 3 billion tons of resources. We think that project probably gets built. There's very few like that globally that are at feasibility stage, still in permitting. But to your point, there's not a lot of special copper projects that are emerging in the junior world that certainly any junior company would build. Most of them have to grow, and will look for a takeover.
Yeah, everybody's looking for those tier one assets. I think we keep forgetting about the mid tiers, in my opinion, like the Hudbays or so of the world that might be coming in.
Yeah, they just bought Copper Mountain to take away one single asset copper producer, small to mid tier. There's very few left, as you know. And then some of the exciting plays, BHP has put their strategic investment into companies like Filo, brilliant discovery down in Argentina, Chile. And again, coming back to the Torquay theme of drill results, that's one of the common threads we're seeing is those are the stocks that are really going to run, is the ones that have outsized results that capture the market's attention and deliver superior returns, the Filos, the Snowlines, et cetera.
I was going to say, where do you see most exciting results come from right now?
Well,
are there certain areas in the world? So it's a bit of an unfair question, but not geopolitical, but geologic is also the wrong word. But
no, I think you're kind of on the right track because of the excitement around Snowline and the Yukon. The Yukon has actually had a fair amount of success and attention. I think that will only increase globally. So the derivatives of Snowline, the companies like Rakla, Sitka, Banyan, Onyx in the Yukon, I think are going to benefit from any good news out of Snowline. Results-wise and any further strategic investment news, because they're just starting early innings in terms of drilling, for the same type of thing. It could be, I'm not as familiar with Filo, I don't cover Filo, but that district along with NGX is having a lot of success, and to your point, BHP and the other seniors, they need large deposits, long mine lives to justify the capital. And where we see copper, we're quite bullish. China's slowed down a little bit, in terms of growth, and that's impacted the price. But 3.75 to 4. We use 4 for our long-term price deck, and we think the seniors are kind of in that bandwidth, 3.75 to 4 for long-term planning.
I want to come back to the trends discussion because I want to talk geological trends as well. You brought up Snowline and the area around it and the whole. Yeah. I'm drawing a blank. The whole belt of deposits. Yeah, the Tombstone Gold Belt.
Tombstone Gold Belt.
That's what I was looking for.
Yeah. Very good.
But there's a bit of a trend going on there. There's a bit of hype actually around it. Do you see something similar elsewhere in the world? Are there other trends as well?
Yeah, there's a number of plays that we thought might have taken off a little bit more than they have. The Fosterville belt down in Victoria Goldfields. Spectacular discovery. I visited the asset back in 2015, and we do cover Southern Cross, and they're having very interesting, compelling results. But that hasn't quite taken off in terms of the area play we expected. We've looked at Japan, where there are a number of players, early movers, and that is, I'm kind of waiting for that to take off. So there's, a number of areas where on the gold and silver front that we're kind of have an expectation that there could be success, and so we're ready and poised. But for now, we've really found that the Golden Triangle in BC has been a great batting cage for us, and that trend continues. In the last 5 or 6 years, there's been about $4.5 billion worth of M&A there versus $500 million in Alaska and $500 million in the Yukon. So we're staying a little bit close to home. We're based in Vancouver with our our coverage in general, but we're happy to go to PNG to cover K92, one of the best transformational discoveries we've seen in our career as an analyst, especially when you have a producing mine and a transformational discovery. So those are the type of things we'll certainly span the globe in terms of coverage, seeing the right things.
Mawson put out some results, I think, out of Victoria this morning. I have to take a closer look, but I saw the headline.
Yeah, they echoed the Southern Cross results, as they are a large shareholder of the Southern Cross stock.
Gotcha.
So that's
what that was. Okay. Gotcha. Okay, I only saw the headline. I was quite impressed, and I thought it made a bit of wave on financial Twitter this morning as well. I saw it pop up a couple of times.
Yeah, I'm a big believer in the Victoria Goldfields. I think it's only a matter of time before another Fosterville is discovered.
Yeah. Absolutely. You mentioned BC and, of course, the Yukon. Are those still top-tier jurisdictions? Can you get stuff done there?
Yeah, you can, absolutely. And I think if you have the infrastructure especially, that's changed everything in BC for the Golden Triangle, that area. First Nations alignment, great geology, and then the infrastructure that went in about 2012 led to the construction of Red Chris. We're seeing the revitalization of Skeena's Eskay Creek as an open pit. That's heading into the permitting process right now. That was a site visit I was just on. Ascot has the premier project that is going to be in commissioning by the end of Q1. So there's a lot happening. That's a mill right on Tidewater as well. It'll be very strategic. So there's a lot happening in the Golden Triangle in particular, a very concentrated, compact area of good geology. And I think that's going to translate to the Yukon. That's why we've written quite extensively about the Yukon, in the sense that there's great geology, relatively good alignment amongst the First Nations. It's not perfect. There's more work to do. It just needs the infrastructure. So our big push in our investment thesis is there will be electrification to the Yukon, extending the BC grid. There seems to be a lot of headlines from the federal government, territorial government, and to some extent the BC government, BC Hydro. So I think that could be on the cards. And then that would open up the Yukon for especially critical minerals projects.
Absolutely. I think you brought up copper as well. If we get power up there to the Yukon, Western Copper and Gold project.
So total game changer.
The road build, infrastructure, I think is key.
Yeah.
As you mentioned, absolutely. You've been on a ton of site visits. We just sort of summer is over. We're recording this the day after Labor Day, so officially summer is over, right? We haven't seen a lot of drill results come out yet from companies. There were a few that started early, so they trickled out slowly. But I think everybody's been holding on and waiting for a September move in the market, and we got a big conference next week as well. But my question is more like, what area are you most excited about to see drill results come out, or where are your expectations the highest, maybe?
Yeah, no, it's a good question. I think some companies, have the assay lab issue, so there's a drag. Others are probably, gaming a little bit to get into September, and as you point out, to have something for the Colorado conferences. Some companies have had to put visuals out because of the assay turnaround and feed the market with visuals. Western Alaska is a case in point, followed by some really good drill results on their CRD project. But no, I think the companies are going to hit the market pretty hard with their best results. They're going to batch them up and put out a critical mass of results. And analysts tend to focus on the shiny objects, the best results sometimes. You have to put that into context and really look at the success rates. But I think it is those northern projects that are going to flood the market. The Golden Triangle, the Yukon, and Alaska, especially any northern projects, are going to be flooding the market with news.
Yeah, absolutely. Well, we've been on a site visit where we saw a company actually have its own prep lab on site.
Yeah.
I thought it was quite interesting because I hadn't seen that in collaboration with SGS. I thought that was interesting. Is that a trend?
Yeah, I think it is. There's a bit of an investment to get that in place. That might have been the high gold visit you did, would have one prep lab.
Scotty.
Along with Scotty as well. Yeah, good point. We were just on that one recently. Yeah, I think it makes a lot of sense. You have to have the QA/QC on site, quality control, quality assurance, but it does ultimately save money. It probably has a year and a half payback to do that prep.
Yeah, absolutely. It's interesting, just to get a bit technical here, but interesting developments, because we haven't really seen that. Companies are reacting. It's taken like 2-3 years to learn, I guess, to see how they can speed up things as well. You mentioned, I want to ask something ahead of the Beaver Creek and the Denver Gold conferences here as well. I think financing is an issue. A lot of companies are bled dry. They ran their kitty dry over the summer, trying to drill, trying to generate news and advance the companies. I really applaud that, actually, not sitting on their hands idling. But do you think the market will be receptive, and what do you think the financing environment is going to be going into the shows and maybe into the early fall, late summer here?
I think back to the haves and have-nots. I think there's going to be this Darwinian culling. I think you're going to see some juniors die. They're just going to
they never die, by the way.
Well,
they never die.
I know.
Right?
They need time to die.
Year.
I know. They need time to die. The dirty little secret in our business is it's $750,000 a year to run a junior just to keep the lights on. So that's the type of capital they need, and then they need the exploration dollars. So I think as they head into the fall, they're going to be scrambling for, if they haven't had good results, new project, new story, new narrative. And there'll be lots of companies down at Beaver Creek in particular that aren't necessarily invited, on the fringes. And I think there's going to be a huge amount of competition for the investor dollar. So it's going to be very dynamic.
Let's turn it around from the investor perspective, because I know you market your research and other things to investors. You talk a lot with investors, funds, and others. What is their general sentiment right now? Like, what's the feedback you're getting? Is it like, Michael, we don't care right now, just come back in January? Or is it like, oh, this is interesting, we'll take a closer look?
It's a bit of both. It depends. On the larger fund side, it's managing liquidity. So if the junior doesn't have trading liquidity, it's very, very tough for them to invest and come down the food chain. A lot of their portfolios are in the producers, and they will go down the food chain into special situations. Use Snowline as an example. They've got Van Eck, 1832 T. Rowe Price in the stock as a junior with torquey drill results. I keep on using that word, apologize. If a junior without a resource, that's very notable. So they will come and invest in some of the special stories at the right market cap with maybe not quite the liquidity, but that's the thing we're missing in this capital markets from the bigger funds. They're not coming into the juniors as much. Then we're seeing those firms that love exploration come in at a very early stage and invest in companies and take a shot before they've made a discovery. They just have good geology. There's a few examples out there. Certainly the Earth Labs and Crescats of the world are early investors, and that's helping a lot of juniors.
Discovery investing, right?
Discovery investing, yeah.
Absolutely. Do you talk to corporates as well? Because I've seen quite a few corporates on the list at Beaver Creek, for example, looking around. You mentioned K92 earlier. That's a prime example I keep using. A single asset producer in a jurisdiction that a lot of people might have trouble with, that needs to diversify at some point. Do you see them getting more active as well, maybe dipping their toes in? I haven't seen the mid-tiers per se invest into juniors getting a toehold, meaning the 9.9 or the 19.9%, and help the junior along a little bit.
Yeah, I think for the junior producers like K92, although they have the capacity to do it, I think they really want to execute. Certainly they've got expansion designs to go to a tier 1 production, 300,000 ounces plus per year. So I understand that. They need to stick to their knitting and execute on a fabulous asset they have. But I think otherwise, I think the mid-tiers, we're going to start to see them come out of the woodwork a little bit more. It's a buyer's market. So strategic investments, I think a little bit of capitulation. I think we're going to see more joint ventures. Companies just cannot sustain these $10 million exploration programs year on year in this type of market unless they're getting tremendous results. So I think we're going to see the mid-tiers in particular more active, coming down the food chain into earlier stage projects. And the seniors will be there if there's big potential, good pedigree. And so in our research, we certainly know who's reading the research, and that's one of the clients is the senior mining companies, along with the big fund managers. All our research is independent, by the way. All our disclosures on the website as far as stock interests and conflicts.
No. One last thing on that topic as well, because I've been saying in my talks as well that governance is an important role there as well for the single asset mid-tier producers like a K92, like a Torex Gold, and the G-Means governance. They have to diversify because they're too focused on one asset in a risky jurisdiction. Having to add a wider profile might be a second leg to stand on in terms of governance. Does that do you hear that at all? Is that pop up?
Yeah, I think most single asset producers desire to have that second asset, so then they don't get caught with their pants down. Something goes wrong on site. Maybe Joe Conway saying that when Primero they just had the one asset, and it sometimes stretches companies to maybe make the wrong decision in terms of investing in the wrong asset just to have another one. Often it's a different jurisdiction to bring down jurisdictional risk. So I think it's got to be really, really careful selection of that second asset that's very complementary to the management skill sets and valuation.
Okay, I'm going to ask you the question. I'm sure you can answer it, but it's a compliance issue sometimes.
Okay.
What is your current top pick under coverage?
Well, Snowline is number one. And we're very clear in our conviction on that one. We've got full coverage, been to site 3 times, and it's a bit of a unicorn in the market right now.
Fantastic. Awesome. Michael, fantastic conversation. We need to do this more often.
Oh, yeah.
Analyze trends in the sector as well. You need to be out there more often, because I think, in my opinion, from what I've seen in the last 2 years, you're the most active, most engaged analyst in the space, and you've hit quite a few home runs the last 24 months as well.
Well, I really appreciate the words, and it was a pleasure to be on chatting with you today.
Oh, it was fun. We'll need to do this again, okay. Michael. Awesome.
Absolutely.
Everybody else, thank you so much. Oh, hold on. I need to find the right camera. There it is. Thank you so much for tuning in. We hope you enjoyed this discussion here with Michael Gray. I need to bring him back on more often. Might have to do this from Frankfurt once in a while, but follow him at Agentis Capital. Reach out to him as well. Follow his work. I think it makes a lot of sense to do so. He does a lot of in-depth research as well. I'm happily subscribed to the research. He kindly sends it to me as well. I get a lot out of it, and I've spent a lot of time with him over the summer as well. So when you get to talk to him, hang out with him, do it. You can learn a lot. And if you haven't done so, by the way, subscribe to the channel right there. It says subscribe on the box. We really appreciate it, because we want to bring more quality content like this to you as well. It helps us. Thank you so much for tuning in. We'll be back with lots more here from Vancouver.